Okay, let's continue. The transaction number 5, purchase of advertising on credit. SoftBite receives a bill for €250 from the Daily News for advertising, but postpone payment until later date. So that means SoftBite advertised their company on the newspaper, and that expense is incurred. However, they didn't pay cash. They are going to pay later. So that one is a liability, isn't it? So then expense increased, and equity, the liability increased, and equity, under the equity, expense is a minus, so liability plus, and the expense is supposed to be a minus. So these offset each other, supposed to be equal in equity, right? Okay. Next one is transaction 7, payment of expenses. SoftBite pays the following expenses in cash for September: store rent €600, and the salary and the wages of employees are €900, and the utilities €200. So these transactions, because they paid cash, so cash, which is asset, decreased by how much is it? 900, 650, 1,700. And all the expenses in the equity decreased by 1,700. Then transaction 8, payment of accounts payable. SoftBite pays €250 Daily News bill in cash. Do you remember that SoftBite the advertise Daily News, and at that time they didn't pay cash. It was a liability, accounts payable. Now they pay cash, so cash decreased by 250, and liability decreased by 250. Okay, so transaction 9, receipt of cash and on account. SoftBite receives €600 in cash from customer who had been billed for services in transaction number 6. So in transaction number 6, there was a revenue 3,500, and out of 3,500 euro, they receive cash 1,500, and 2,000 was the account receivable. Out of account receivable 2,000, the SoftBite collected $600. So cash increased 600, account receivable decreased 600. So there is one asset increase, one asset decrease. So there is equality in equation. Okay, then transaction number 10, dividends. The corporation pays a dividend of 1,300 euro in cash to the shareholders. So that means that they paid cash, so cash, which is in asset, decreased by 1,300, and dividend, the equity decreased 1,300. So there is equality in equation. Okay, now then you have to make a total from transaction number 1 through number 10. I don't know why this PowerPoint doesn't have total. So, well, anyway, this total, you can calculate this total. Number 10 transaction, the cash decreased by 1,300, and dividend decreased by 1,300. So total of asset is supposed to be there's supposed to be a total, total cash is supposed to be 8,050, and the accounts receivable 1,400, and supplies 1,600, and equipment 7,000. So total asset supposed to be 18,050 euro, and the liability is supposed to be 1,600, and share capital 15,000. And revenue 4,700, and expenses 1,950. Supposed to be a minus from revenue, and there is a dividend minus of 1,300. So altogether, liability plus equity, the sum of the total is 18,050 euro. So the transaction analysis the pages, the asset supposed to be equal. I'm sorry, there is no total. Something wrong with this PowerPoint. And 18,050 and 18,050. So there must be a equation. Okay, all right. Now, out of these numbers, you are going to make a financial statement. Companies prepare for financial statement, the income statement, retained earnings statement, and statement of financial position, and the statement of cash flow. Let's talk one by one. Okay, the income statement. Income statement is an income statement to report the success of profitability of the company's operation over a specific period of time. For example, under the name of the company SoftBite Inc., there is an income statement for the month ended September 30th, year 2014. That means just 1 month income statement SoftBite prepared. And they started from September 1, ended September 30th, so 1 month. Well, you can prepare financial statement monthly, 3 months basis, or 6 months basis, or annual basis. So, usually going outside the investors to creditors and the external users, you have to prepare yearly basis. But for internal purposes, you can prepare 1 month, financial statement, no problem. Okay, so income statement report the success of or profitability of the company's operation over a specific period of time. For in this case is SoftBite for just 1 month, September. So total revenue 4,700 out of the transaction analysis, page 10. So that is 4,700. And the expenses is salaries and wages 900, and the rent expense 600, and advertising 250, and the utility expense 200. So total expense is 1,950. This 1,950 you should deduct from the revenue. So net income should be $2,750. Then, after making income statement, you should make a retained earning statement. Retained earning statement is first of the statement shows the beginning retained earning amount, then come to the next net income and the dividends. The ending balance of retained earning is the final amount of the statement. for example, for SoftBite Inc. case, and retained earning at the September 1, there was a zero balance. There's no retained earning because SoftBite was formed on September 1. Okay, so you should add net income. And the net income, this figure 2,750 came from the income statement. So 2,750 and minus the dividend the company issued to the Ray and Barbara Neal, the shareholder of SoftBite, 1,300. So 0 plus 2,750 minus 1,300. The ending retained earning balance has to be 1,450. This 1,450 should go to the balance sheet, which is a statement of financial position. Okay, so as you see of the PowerPoint, and this 1,450 goes to the retained earning on the statement of financial position. Okay, there is a listing of all the assets you picked up from page 10 on transaction analysis, and that is the equipment 7,000 and the supplies 1,600 and the accounts receivable 1,400 and the cash is 8,050. This total asset all add them up together is 18,050. And under the equity and the liability, under the equity side, share capital ordinary, the investment made by Ray and Barbara Neal were $15,000, and plus retained earning. The numbers were coming from the the retained earnings statement. That is 1,450. So total equity is 16,450, and then there is a liability, accounts payable, that is 1,600. So 16,450 of equity and 1,600 liability together come up to 18,050, which is exactly equal to the asset. So now let's now after preparing our financial position and this then there is a cash balance 8,050. This cash balance, how did you get the cash? So you have to make a statement of cash flow. So statement of cash flow means that it provides information of cash receipt and cash payment for a specific period of time. So it reports cash effect of a company's operation during the period and the investing transaction and the financing transaction. Okay, let's look at in detail. And for cash flow from operating activities, cash receipt from revenue 3,300. Actually, even though there was a 4,700 revenue took place, only cash received is 3,300. So 1,200 plus 1,500 plus 600. So 3,300 is cash collected in the month of September. So that's cash from operating activities. Out of that, you have to minus expenses. All expenses are paid by cash. So all the uses of cash total is 1,900 $3,350. So from 3,300 minus 1,950, actually net cash provided, the source of cash from operating activities is 1,350. Then, well, actually, the company purchased equipment. That was 7,000. So that is investing. Actually, company SoftBite invested their money to purchase a long-term or the fixed asset, long-term asset. So usually, investing activities, company spend the money. So actually, this is the uses of the fund, not the source of the fund. So usually, the investment, out of the investment activities, usually minus figures. So uses, not the sources. The operating activities, you have sources of income 1,350, but the company uses 7,000. Then the next one is cash from financing activities. What is a financing activity? Financing activities is either you sell your stocks to stockholders, or you borrow money from the bank, or and the dividend paid to the shareholders. Nothing to do with the operation. Any cash, sources of cash and the uses of cash, nothing to do with operation, nothing to do with investing. That's are all financing activities. So for this case, they received 15,000 from selling stocks to Ray and Barbara Neal. So they got $15,000. That is a share capital, right? And then at the end of the September 30th, company pays dividend to 1,300. Excuse me. So 15,000 minus 1,300, the cash sources from financing activities is 13,700. So adding all this, the cash from operating activities are 1,350, and the company spent money, that means the uses of the money, for 7,000 to purchase equipment, and also there is through the financing activities net of 13,700. These some of the three activities come to the 8,050. So at the beginning of September, there was zero cash, but from September 1 through September 50, cash came in and cash goes out, and total the summation of cash receipt and cash uses. So the ending balance is supposed to be 8,050. Okay, this 8,050 has to be equal amount of their cash balance under the statement of financial position under cash. Okay, so about 1 hour, I explained about how you are going to make a financial statement, how you understand the financial statement. This is a very, very basic. I lectured you today. Well, even the fully understanding of a financial statement, it takes several years, and it takes you should take several courses to understand and making financial statement. Well, even just 1 hour, I really appreciate for you listening my lecture. Thank you so much.